the significance of the Eurozone passing of that European Financial Stability Fund in Germany cannot be understated today, but markets generally factoring in that this will be passed.
Yes, Sam, absolutely. I think it was probably expected, certainly if you look at the reaction of the market, not much reaction, so I think it was probably priced in. But I think in the case of especially Angela Merkel in Germany, this is a case of damned if you do and damned if you don't. It certainly is not a popular vote that has been passed, but it was a very necessary one for both for Germany, but also for Greece to a large extent. I think the problem is that we are now in a situation worldwide where there is very strong leadership required by the politicians, but the type of action that they need to take is extremely unpopular. And I suspect that over the next couple of years we will probably see a significant change in the names and the roles that we see across the world stage in terms of who those leaders are, because I don't think that the action that is required to pull the world through this very, very harsh economic times are going to be popular moves, and I don't think you're going to find many people who want to take over the baton from the likes of an Angela Merkel or a Nicolas Sarkozy, or even for that matter Barack Obama, because whoever takes over this baton and has to continue implementing these very tough austerity measures will not be popular with the voters.
Yeah. As you say, looking at the local front, we've got some data flow coming out today. Credit and money supply increasing by 6.2% year on year here in South Africa. A piece of good news, perhaps, banks are lending, or South Africans are borrowing again.
Well, I think at the, sort of if you just look at the headline number, it might be a bit shocking, because certainly higher than the market expected. But if you just look at sort of the second level of the number, which differentiates between whether this was corporate lending or whether this was or credit extension or whether this was to the private consumer, I think the good news in that is that it's certainly not a credit hungry economy that we're looking at, and certainly most of the lending was done by the corporates. Quite possible that we might have found that that corporates did make use of the more recent strength in the rand before we of course had the weakness that we now currently experience, but use that strength in the rand to actually boost some of their capital intensive nature businesses to actually put in some additional capacity, because that's really where we saw the credit extension. So when it comes to the Reserve Bank looking at these numbers, I think it's very unlikely that they will be concerned about the level of these numbers, even though they were higher than expected. We are still sitting at multi-decade lows in terms of private sector credit extension, and even on the money supply, nothing to be concerned about. In fact, I think a lot of people would actually have liked to see a little bit more credit extension, because it would be growth positive if we actually saw more money being spent and more being lent by the banks, because it means it's not being tied up in the banking system.
But for now, it is a sign of confidence, perhaps, to take from those numbers.
Yes, it is some confidence. We must just bear in mind that it does come off relatively low levels, I think, especially on the corporate side. If we look at the other piece of number that came out just now, also was on the PPI side, also much higher than expected, although I don't think we should be too surprised considering what has happened with the rand in the last couple of weeks, and obviously that feeds very directly and immediately through into the producer price inflation. What would be of more concern to the Reserve Bank is the extent to which the PPI numbers feed through into the consumer inflation. And they did warn last week that they would expect the consumer inflation to breach that upper limit for a period, but they don't see this as a demand push inflation rise, but rather a supply pull, or sorry, a supply push inflation concern rather than demand pull.
Some news flow today out of the commodities sector. Firstly, Anglogold, that it's investing $250 million annually in Brazil. Different style of mining there. What do you make of this news? The stock is trading low, but perhaps in line with the resources sector.
Well, a little bit worse than the rest of the resource sector. I think quite an interesting move for us. I almost want to liken the move of Anglogold moving into Brazil with the likes of an MTN and an SAB Miller venturing into markets that many other players would not necessarily have ventured into. Not that Brazil is an uncertain or an unknown market, but even the CEO, when they announced this move that they're planning to make, did highlight that they are still quite concerned about the tax regime in Brazil, and that they are still in negotiations with the Brazilian government in terms of the particular tax cuts and tax dispensations that they would receive there. And I think maybe the market is really just indicating that they're not particularly happy with the fact that they are venturing into a market where all of these regulatory aspects are not fully known.
Yeah.
But I think it is compliment to a company and to a management team that says, you know what, we need to be diversified on as many levels as we possibly can. Regional, geographic, style of mining, regulatory and legal dispensations and so on. And I think this is quite a bold move by Anglogold, and I hope that over the longer term the market will actually give them the credit for this bold move that they have taken.
Very quickly, the platinum sector, we've also had some earnings updates there and results out for the likes of Wesizwe and Jubilee. What did you make of the news, Jubilee's sterling trading update there, where on the other hand we had Wesizwe swinging to a loss?
I think it does show that there's opportunity to be had if you do your homework properly. You know, overall in terms of the commodity sector, obviously the relatively high commodity prices coupled with a recent weakening rand would translate into good earnings, but it all comes down to what is the bottom line for many of these platinum and other commodity producers. So it's the extent to which they are able to manage their costs in the South African market. The cost rises, especially coming from the labour side of things and the electricity push. So I think it's very much a case of comparing the stocks at a micro level, almost a stock specific level, doing your homework and showing that there is opportunity to be had even within a fairly homogenous sector like platinum.